What if I told you the most powerful retirement strategy in history looks completely boring on the surface? No volatile crypto bets, no trending stocks, no get-rich-quick promises. And that's exactly why it works. Most people spend their entire careers chasing the next big thing. They watch their portfolios swing wildly, lose sleep during market crashes, and eventually sell at the worst possible time. By the time retirement arrives, they're not living off their wealth. They're terrified of it. But a quiet group of investors does things differently. They don't obsess over stock prices. They don't panic when markets dip. They simply collect checks every quarter, year after year, for the rest of their lives. This strategy has been hiding in plain sight for over a century. It's used by some of the wealthiest families in the world. And once you understand how it works, you'll never look at investing the same way again. By the end of this video, you'll know exactly how dividend investing works, how much income it can realistically generate, what a real portfolio looks like, and the critical mistakes that destroy most people before they ever see results. Stay until the end, because the last section could save you years of financial pain.
Before we go further, if you're serious about building wealth that actually lasts, hit that like button and subscribe right now. This channel breaks down real strategies that work for real people, not just Wall Street insiders. You won't find this stuff in a 30-second reel. Stick around, it's worth it. Here's what we're covering today. First, you'll see exactly how dividend income works and why it's fundamentally different from every other investment approach. Then, we'll break down the math, real numbers, realistic expectations. After that, we'll walk through a clear, simple strategy for building a dividend portfolio the right way. Not just chasing the highest yields, but building something sustainable. Then we'll show you a real example portfolio with actual allocations, estimated yields, and projected income. And finally, we'll cover the 4 most common mistakes that quietly destroy dividend investors before they ever reach their goals. This isn't theory. It's a blueprint. Let's get into it. Here's the problem with how most people think about investing. The financial media is built on excitement, new IPOs, meme stocks, crypto surges, because excitement drives clicks, and clicks drive advertising dollars. But excitement is the enemy of long-term wealth. The investors who actually retire comfortably, who never have to worry about market timing or sequence of returns risk, aren't the ones chasing trends. They're the ones who quietly built income-producing portfolios over decades. Dividend investing works because it flips the entire script. Instead of depending on selling your assets to generate income, the assets pay you, automatically, consistently, regardless of whether the market is up or down. That's not just a financial advantage. For anyone in or near retirement, it's peace of mind that money simply can't buy another way. Let's talk real numbers, because vague promises aren't useful. The average dividend yield for a well-diversified dividend portfolio sits between 3% and 5% annually. That means for every $100,000 invested, you're generating $3,000 to $5,000 per year in passive income. No selling, no market timing, just income. Scale that up. $250,000 invested to $7,500 to $12,500 per year, to roughly $625 to $1,040 per month. $500,000 invested to $15,000 to $25,000 per year, to roughly $1,250 to $2,080 per month. $1 million invested to $30,000 to $50,000 per year, to roughly $2,500 to $4,160 per month. Now here's the part most people miss. These numbers grow over time. Companies like Johnson & Johnson have raised their dividend for over 60 consecutive years. Coca-Cola for over 60 years. Procter & Gamble over 65 years. These aren't flukes. They're businesses engineered to reward long-term shareholders. If you're reinvesting those dividends during your accumulation years, buying more shares with each payment, compound growth does the heavy lifting. A $100,000 portfolio growing at 7% annually with dividends reinvested becomes roughly $387,000 in 20 years. Without reinvesting, that same portfolio stays much closer to the original value. The math is straightforward. The discipline to let it work is the hard part. There are two types of dividend investors, those who chase yield and those who build wealth. Only one of them wins. Yield chasing, the trap. It's tempting to look at a stock paying a 10% or 12% dividend and think you found a gold mine. But ultra-high yields are almost always a warning sign. They usually mean the market expects the dividend to be cut, or the company is paying out more than it earns, which is never sustainable. When that dividend gets slashed, the stock price follows. You lose twice. The right approach: yield on quality. Successful dividend investors focus on companies with 1. Consistent dividend growth, not just paying dividends, but raising them year after year. 2. Strong payout ratios, ideally below 70%, meaning the company isn't overextending. 3. Durable business models. Think consumer staples, healthcare, utilities, financials. 4. A track record through downturns. Did they maintain or grow the dividend during 2008 to 2020? A moderate yield of 3 to 4% from a company growing that dividend by 5 to 7% annually compounds into something extraordinary. In 10 years, your yield on cost, what you earn relative to what you originally paid, can double. Diversification is non-negotiable. Never let any single stock make up more than 5 to 7% of your dividend income. Industries go through downturns, sectors get disrupted. Spreading your income across healthcare, consumer goods, financials, energy, and utilities means one bad sector doesn't derail your retirement. The goal isn't the highest paying portfolio, it's the most reliable one. Let's make this concrete. Here's a simple, realistic, $300,000 dividend portfolio built for income and stability. Holding allocation. Yield annual income. Johnson & Johnson, $30,000. 10%, 3.2%, $960. Procter & Gamble, $30,000. 10%, 2.5%, $750. Coca-Cola, $30,000. 10%, 3.1%, $930. Realty income, REIT, $30,000, 10%, 5.5%, $1,650. JP Morgan Chase, $30,000, 10%, 2.8%, $840. Verizon, $24,000, 8%, 6.5%, $1,560. AbbVie, $24,000, 8%, 3.8%, $912. PepsiCo, $24,000, 8%, 3.3%, $792. Nextra Energy, $24,000, 8%, 2.7%, $648. Schwab U.S. Dividend ETF, $54,000, 18%, 3.5%, $1,890. Total estimated annual income, approximately $10,932. Blended yield, approximately 3.6%. Monthly income, approximately $911. This isn't a get-rich-quick setup. It's a foundation. Add to it consistently over 10 to 15 years, reinvest dividends early on, and that $911 per month becomes something that can meaningfully supplement or fully replace other retirement income. Notice how no single holding dominates. The ETF at the bottom provides instant diversification across 100-plus dividend-paying companies. The REITs add higher income. The blue chips provide stability and growth. It's balanced by design. Quick question for you. Drop it in the comments. What's your biggest challenge when it comes to investing for retirement? Whether you're just starting out or you've been at it for years, I'd love to hear where you're at. Every comment helps shape the content on this channel, and you might just see your question answered in a future video. This is where most people quietly destroy their results. Don't let this be you. Mistake number 1. Chasing high yields. Already covered this, but it bears repeating. If a dividend looks too good to be true, it almost always is. Do the research. Check the payout ratio. Look at the last 3 years of earnings. A 10% yield that gets cut in half doesn't just hurt your income, it usually means your principal drops too. Mistake number 2. Not reinvesting early. If you're under 55 and not yet living off your dividends, every payment should be going back into more shares. The compounding effect of reinvested dividends is the single most powerful accelerant in this strategy. Spending your dividends early is like pulling weeds before they bloom. Mistake number 3. Ignoring dividend growth. A 2.5% yield might sound modest, but if it's growing at 8% annually, in 9 years, you've doubled your income from that holding without investing a single additional dollar. Prioritize growth rate, not just current yield. Mistake number 4. Lack of patience. This strategy doesn't work in 3 months or even 3 years. It works over decades. Investors who panic sell during a market downturn lose not just capital, but the dividend income stream they spent years building. The market will crash again. Stay the course. Still with me? Good, because we haven't talked about the one thing that makes this strategy virtually unstoppable when done consistently over time. Here's the thing about dividend income that most people don't realize until it's almost too late. The longer you hold, the less the market price actually matters. When your income is the goal, not the price, you stop reacting, and that changes everything. Let's bring it all together. Dividend investing works because it shifts your financial focus from price to income. Instead of hoping your stocks go up so you can sell them, you build a portfolio that pays you to hold it forever. The strategy is simple. Focus on quality companies with consistent dividend growth. Keep yields moderate and sustainable. Diversify across industries. Reinvest early and stay patient. The math is on your side. Time is on your side. The companies doing this have been paying and growing dividends through every recession, war, and market crash in modern history. They're not stopping anytime soon. The only thing that can stop this strategy from working is you. That's a wrap on today's video. And if you made it this far, you now know more about dividend investing than the majority of retail investors out there. That's not an exaggeration. If this was valuable, do me a favor. Hit the like button. It genuinely helps this channel reach more people who need this information. And if you're not subscribed yet, now is the time. We cover dividend investing, retirement planning, and financial independence every single week. No fluff, no hype, just real strategy. Share this video with someone who's still trying to figure out how to make their money work in retirement. You might just change how they see investing entirely. We've got more dividend content on this channel. Go explore. See you in the next one.